So unless you're lucky enough to have a bag load of cash to show up at a closing with to buy a house, you're probably going to need some type of financing. And there's a lot of different options for financing out there. So I'm going to take a few minutes to go over some of the most basic and common ones that are used. The most common is a conforming loan, which is a loan offered through the government agencies Fannie Mae and Freddie Mac. And with these types of loans, first-time home buyers can put down as little as 3% for their down payment. If you're not a first-time home buyer, you can put down as little as 5% for your down payment. And traditionally, these are 30-year fixed loans, although there's options for shorter-term loans all the way down to 10-year fixed in any increment of years you want. You could take out a 13-year loan if you wanted to. There's also adjustable rate loans, which are 30-year loans where the rate is fixed for a set amount of time before it starts to adjust, usually either 5, 7, or 10 years for that initial fixed rate period. And the benefit of the adjustable rate loans is the starting rate for that initial fixed rate period is going to be lower than a comparable 30-year fixed rate mortgage would be. So it's a good option if you're planning on paying your loan down aggressively or if you know you're going to have the home for a short period of time. Other types of common loans are Federal Housing Administration loans, FHA. These are another government type of loan that are good for first-time home buyers. They require you put down at least 3.5% for your down payment. And the benefit with these types of loans is even if you have lower credit scores, there's no adjustments to the interest rates, which there are with conforming loans. So with FHA, you can have a loan credit score as low as 580 and really have no adjustments to the rate as compared to if you had a 780 credit score. Another common type of loan is through the Veterans Administration, a VA loan. These loans are great for veterans because they can put down no down payment and they have no monthly PMI either. So if you're a veteran, it's definitely worth looking into to see if you qualify for one of these types of loans. They're very low 30-year fixed rates as well. Another common type of loan here in Massachusetts, especially with the first-time home buyers, is a program through Mass Housing. They offer a loan, which is actually a Fannie Mae product, but is specific for Massachusetts residents, where you can put down as little as 3% and have no PMI in the loan and get very good interest rates. There's some unique benefits with this program, like there's unemployment assistance where you can have help with your mortgage payment for up to 6 months if you become unemployed. So one side note with this program is there are income limits. So if you make too much money, the program's not going to be an option for you. But again, you can always check with your loan officer to see what the limits are in the specific towns that you're looking at for the mass housing program. And then another common type of loan is jumbo mortgages. Jumbo mortgages are loans that exceed what's allowed on the conforming loans. Right now in most of eastern Massachusetts, for a single family or condo, the limit's $598,000. So if you need to borrow more than that, you're going to fall into the jumbo loan category. The biggest difference there is the underwriting requirements are typically a little more strict, and there's usually more of a down payment requirement. You can, in most cases, get jumbo loans with as little as 10% down, which is still very good, but it is a little more than some of the other types of loans. So depending on what your scenario is, it's important that you're talking to an experienced loan officer that can clearly explain your options to you. And that way, again, the key is you're well informed and know what to expect as you move through the process.